Hey, what's up, everyone? This is the end of the week, January 15th, 2021, and we're going to go over the S&P 500 real quick, looking here at the long-term weekly chart. Last week, the price finally hit into this target zone that we're looking for to create that 0, 1, 2, 3, 4, 5 wave up here. So for the first time since about February 2009, we are now have in that five-way move, and we're looking for eventually a retracement to happen. So basically, the main way I look for retracement to happen doesn't happen 100% of the time, but it is the main criteria I use to go whether long or short when it's in the five-way move up here, is for it to close below the 21 EMA. Now, granted, that's for my intraday trading when I do it, so it may be a tad bit different for the super long term charts out right here. That is the main criteria I use. So until price closes below the 21 EMA, which is the red line right here on the weekly chart, still bullish on the market. And it doesn't mean, unfortunately, which is 100% accurate all the time, that when price does close below the 21 EMA, that it's heading straight down from there. Plenty of times close below it, continues to go up a little bit more, maybe make higher highs and stuff like that. But one thing to note is price is at, you can see over here on the left hand side, some of these Fibonacci extension levels over here. Price is above the 11.89 level right here already before it even hit into that, which is very rare for that to happen with the price. So the next level where if price could go up to would be way up here at the 17.89 level, which is going to be 48.31. So we're looking for another 1,000-point move if that does come to fruition and if that does happen. And then one other thing I have been using recently is testing this out, is if you draw a triangle, or not triangle, a square from the 0 point up to the third point right there, and let me just change that to that, and then you make the low come down here and be right on the 1 point right there. This sometimes also tends to be a sticking level as well, where I've seen a lot of reversals happen right here. So if this is going to be one, then the price has a little bit more room to run for the S&P 500 up to around 39.60ish or so, or something like that. Now, of course, obviously that does not work 100% of the time, but it is just something that I have noticed that does seem to work quite a bit of time when price does hit that area. And since we're already so far without having any type of retracement, could be an interesting area to look at, and that is around 39.60. But right now, still bullish, even though this week was a down week here in the market. So going over to the S&P 500 right here, back it up here. Friday, Thursday, Wednesday, Tuesday. Here is Monday, and I'll explain what some of these new lines are here on the screen, because it's a new trade setup that I am currently doing in conjunction with the five-way moves, which I trade. So looking over here, Monday's little box right over here, the black line is the high from Monday, and the black line below is the low from Monday. These white lines are the Fibonacci extension areas each way off of it. So you have the negative 1.146, 1.618, then the 2.618 down here, and then as you can see up above, the same thing over here. Obviously, price doesn't come and hit it each way, but when it does, there is usually some type of movement off of it. As you can see, so let me back up here. So going into Monday right here, this is what this box signifies right there. When price comes down and hits one of these lines down here, a white line, I put a box from Monday just to signify to myself that, okay, this is where it hit. And then the exit you're looking for is the 0% line right there. So as you can see, when price hit down here at the line right there, 37.69, pretty much retraced straight back up to about 37.76. Now, that doesn't necessarily happen every single time where price hit the 1.146 and hit the 0. There have been times that price continues to go through it, hits down here at the 1.618, and then rarely, but it does happen. I have seen it happen, but that is the fewest percentage. I would say if I was putting percentages on it, it would be maybe, I don't know, 5% of the time. Price goes through all the way down that, maybe 2% of the time. It rarely happens, but comes down here and hits the 2.618. So when those two things happen, if price hits the white line, the 1.146, and does not hit the 0 line right here, but goes down and hits the 1.618, Then the exits move to right here at the 1.416, and then if price doesn't hit that retracement but goes on, continues back down, and it's at 2.618, and then the exit right here at the 1.618 level. But as you can see for this week here in the S&P 500, when price did hit the white line down there, it came up pretty much within, was that 5-10 minutes, or 5 minutes actually, very next bar. Came back up, and tons of support right down there. And coming into this week, we actually had a live one going on because this is from the last week's. That would be the 0% line up to the high on the Monday, and that's a 1.146. As you can see, price came up, went through it, started rattling around a little bit, came down close, didn't fulfill it, came down close again, it didn't fulfill it, and then on Tuesday of that week, it did come down and hit that line, as well as using that as a 1.146 for this week's as well. And so when Monday starts up, we'll wait for Monday to close, and then we'll draw those lines again. They just look like, where is it, Monday extensions? Yeah, that's all it is. There would be the high, there would be the low, and that's what we look to trade off of those. So another trade setup I like to use as well. Going into some of the individual trades, we can see, let's scroll this out a little bit more, see what the week looked like as a whole. Opened up over here. It's pretty much a range week the whole week until late Thursday. Late Thursday going into Friday, and then the market kind of bottomed out. And you see how the market's finished up over here now, going into a long weekend here in the U.S., Martin Luther King Jr. holiday weekend. Price has pretty much, going back to the lows, which it came to earlier here in the day. But going back over here to Monday, you can see there's just a lot of 5-leg moves, 0, 1, 2, 3, 4. There's a fifth one down here, came up and took it out, 0, 1, 2, 3, 4, 5, and again, so very rangy day, very rangy. Actually, the first 3 days, Monday, Tuesday, and Wednesday, were, for the way I trade, horrible trading days. Some of the only good entries, like this would have been a good entry right over here, going from Tuesday right here, 0, 1, 2, 3, 4, 5. This would have been a very nice trade to get in right here. You see price closed below the 201 EMA. And these blue lines right here, they just signify the levels for me, so it helps me keep track of what stage we're in. See, there's the 0, 1, so I put that on top of the 1 right there, goes down. Put this one on top of the 3 right there. And so price can hit that, close below it. Would have been a nice little trade down here from about 38.02 all the way to about 37.98ish, a little bit above that. But price, it entered into it at, what time did that enter it in? You know what? This is one I just missed. I should have taken this one. It entered in, it was at 22.10. That's 10:20 p.m. my time. So that is a trade I should have gotten in right there. I just missed that one. But going into, see, Thursday and Friday, there actually were a couple of good trades to get, and then some frustrating ones because you have this big move right here, 0, 1, 2, 3, 4, and then coming down here for the fifth wave down here. I was looking to get into it at the end of a Thursday yesterday, but the price just skyrocketed up, went up to the next day, and finished that one up right there. But then, let's see, I think it was mainly on the Dow Jones and Russell 2000 were ones I took. This one would have been another good trade over here for Friday, and let's see, at 1 a.m. Yes, I was definitely asleep by that time. So unfortunately, when you're trading off these 5-minute charts over here, when I'm trading off of them, there are plenty of good trades that always seem to happen between about 1 and 4 a.m., which is when I am asleep. So I don't know, maybe I need to move to London or something like that, and that'll help out. But yeah, closing above it right over here, even right over here, you can still get right in. Up in 37.72 to about 37.76.50, something like that. So these things just repeat over and over again. Let's see right here if, let me try to draw one here for you real quick and see. I'll show you how to do it. So you take that, be the 0 point down there. Let me get the right one that we need for it right there. And what I'm looking for is, this will be the last thing, so I know I'm kind of mumbling on for it, but so you take the 0, and what you're looking for is a pullback. So for a pullback, all right, so here we have the pullback. We got a bar close above it, so that is one we can use right there. Now, how this thing gets how I may move it down to make that the 0 to the 1 point right there is if this high right here gets taken out. So we have to see what is happening. So then what I do after that is I'll draw my little line to signify that's the level I'm looking for. And then what I'm looking for, the let's see, 0, 1, 2. The third point, what we're looking for is price has to, using the low of it for my Fibonacci retracement level, price has to come up at least to the 38% line. You can see it does right here, but price takes out the 1 point and goes above that line right there, so we can't have that. So we keep on looking for it low. There's a new low right there, but then price goes and takes it out. And then on top of that, we have a new high created, so the 0, 1, 2 point will now be up there. Let's get rid of that thing right here. So we're looking at that right there. So there's 0, 1, 2. So then we'd start looking for a new low, come back over down over here. It did create one, but price came all the way back up, created a new high up there. So now coming back 0, 1, 2 right there. And let's see if we can actually get a move down below without it coming up and violating the first point. So it looks like we have one right here, but let's see what the low is right here. 3764.75. This is 3764.75. 3764. Perfect. That works. It's just it didn't break this level, so that will do it. So using that to that low, you know what, that still isn't one as well because we're looking for a retracement. We didn't get one. You see it's just creating a new low, new low, new low, new low. So if this bar right here had retraced back up and closed within this bar, that would have been good enough to create it, but unfortunately it did not. So we are still looking for a retracement. So there we go right there. So for the next leg move down, would be price needs to trace back up to about 3754.25, and then we could consider that to be the third point for it right there. And just draw the 0, 1, 2. Yeah, that'll work. Okay. 2, 3, somewhere up here, and then what we'd be looking for to get the fifth point down there. Looking for the 0 point to the third point. Let's draw just a little target zone land in spot box. And there we go. So potentially if this is going to be a five-way move over here, I'm not saying it is going to be, we need price to trace back up to about 3754.25, and then we don't need it to go up and break 3764.75. If it does, then that makes it null and void. But if price gets any type of retracement before breaking all the way up here and comes back down here and it hits at least to 3743.25, then that would be a 5-way move down. Let's see here. There's aftermarket hours right now. There's 23 minutes left in it, so that's probably not going to happen. A move down here like that. So anyways, that's just how I do it. That's how, when I'm going throughout these through the day, that I look for and trade off of, because if price does come down and hit that, I'd be looking for price to go up and move back up, close above the 21 EMA, and then let me just show you real quick. And then how my X I'm looking for, I use the second point, and the move right here, and then just keep drawing this down to whatever the lowest low is right there, and the exit is going to be the 38% level, and then so right there. So yeah, that's what I do for S&P 500. That's what I do for the Russell 2000. You can see that one, and also for the glad I saw that. Let me take that off of there. Didn't need that on there going into the weekend. Yeah, because this was a trade I took earlier today. Let me just show you here real quick. Little bonus for you for the Dow Jones right here. Yeah, I was looking at getting, again, up at that level. Price continued to move up right there, but it didn't. So you see down here the 0, 1, 2, 3, 4, 5 up here. And you see it hit up into the target box perfectly. And then when price came back down, this is where I get, this actually faked me out right here. So price came down, looked like it was going to just come on. Let me show you what it would have looked like in real time. Yeah. So price looked like it was going to scream on down. So I went ahead and got it when price kind of traced back up here. But it violated my rule where I wait for price to close below the 21 EMA. As you can see, it was right on it. So I just went up and when price opened up, started moving up. I got out, took a little loss for it, but hey, it is what it is. I messed up on that trade, no big deal. Took a small loss for it. And then when price came back down, had that big strong candle down, I got back in right about, I think right up in here, got short again. And then you see price started waving around, and then I was thinking price is going to continue to move back up because, let's show you right here to the third, go to right there. I had my next entry right up somewhere over in here because we had that blue box from the 0 to 3 level moving up to the 1 box, and plus this is the top of the target zone box as well. So that's where I had a next short entry right up here somewhere, waiting for that to get hit. But obviously price didn't. Did come up a little bit of new high, just wrote it out, and then as you can see, price came back down and hit the exit area, which I had my exit somewhere just slightly above it. I never had right on it, just slightly above it, and there we go, and got out of that trade for a little bit of a gain for there in the Dow Jones. And then there's a similar trade here for the Russell 2000 as well. 0, 1, 2, 3, 4, 5. A little bit easier trade. Price did break down below it, and I didn't have my things on there. I know I took some of those trades. But anyways, price got down on there, and then I think I got out on this bar right down around here somewhere. And then price came down all the way through it. So anyways, that's a couple of the trades from today, overview of the week. And then I'm probably going to start having a video Monday after the close on Monday, just to show the levels for the these levels, the Monday's close levels, because here, here's one for the Russell, and this video is going way long, so if you're still listening, cool, but going way long. So yeah, so here's the Monday high. Price come up and hit that right up there, as well as that was the bottom of the target zone for a 5-way move. Price hit off that, came down and hit it pretty easily. Also hit that move down right there. So once that happens, I don't trade off that anymore, off these white lines anymore. It's done. Price continued to move up, then definitely we gotten short up here, but it didn't. It came down here and took it out. So I just leave it on there for to see. Sometimes it can use support and resistance levels, but price continued to move up, move up. No big deal because not doing anyway. And then again, Thursday and Friday we had that. Let me show you what the Dow Jones looked like, because the Dow Jones actually went each way off of it. See, here's Monday's high and low. Price came up and hit it right up here on the Dow Jones, and then came back down, took it out, and then went all the way down to the south end, and went down to the south, which this was a trade this morning I was looking at getting, but it shook me out. I didn't get into it because I was waiting for price to come back down here to this line, or not come back down, but come to this line around 33.90, because at that time it looked like it was just screaming back down. But then right here, that's when it reversed, came back up and hit it, took out that target. And let me just show you NASDAQ as well. Why not? Why not? We'll be here all night doing this. And see price come right here at the 1.146 and hit that as well. So that's that. Y'all have a good weekend. Talk to you later. Bye.